What are the various avenues for investing in the stock market? How should someone choose the right one for their financial goals? Our chief financial planner, Mr. Ramlingam, will guide us through. Ramlingam, the screen is yours.
To invest in stock market, there are five regulated ways to invest. One is ULIP, unit linked insurance policies. Next is mutual funds. Next is PMS. Next is AAF, alternative investment funds. Next is investing directly in stocks. Out of these five options, ULIP alone, I will not suggest to any of my investors because ULIP has got a high entry charges, high exit charges. There is also lock-in, poor performance. ULIP is regulated by IRDA, insurance regulator. They simply view this as an insurance product. What kind of claim settlement they give? That is their main agenda. They will not regulate ULIP as an investment. That is why, if you look at news 45 days back, IRDA has given a alert to all the investors and also information to all insurance agents and insurance companies saying that don't market insurance product as an investment product because many insurance distributors, investment bankers, they sell insurance policies as investment products. It is not that way. IRDA has cautioned all of them. So rest of the four avenues are regulated by SEBI. SEBI is one of the very good regulator in the world, not in India, in the world. So SEBI regulated products are really good. So we can avoid ULIP and we can consider only these four options for investing in stock market. Out of these four options, mutual fund is a beginner friendly investment product. Till someone is accumulating 1.5 to 2 crores as a corpus, mutual fund itself will be sufficient. After someone has accumulated enough money in mutual funds, then they can go to PMS. PMS, the minimum investment itself will be 50 lakhs. Then they can go to AAF. In AAF, they can invest in unlisted stocks, pre-IPO stocks, private equity, high yield bonds and all. Then at the fourth level of risk, they can go to direct stock investment. But at times, investors skip all this process, straight away jump into direct stocks, which is not right. So process oriented investment, we have to really look at level 1 risk, level 2 risk, level 3 risk, level 4 risk. So we will spend more time on mutual fund, which is basically a beginner friendly investment product. Mutual fund is extremely regulated by SEBI. SEBI has given a lot of restrictions saying in one single company how much to invest, in one single sector how much to invest, in a company's capitalization how much a mutual fund company put together, all the schemes they can own. Everything is regulated. So that way, that is why mutual fund has become a very vast product in the last 10 years time frame. You have seen a lot of robust growth in mutual fund collections.
Thanks for your detailed answer. If you have any doubts regarding this or any other financial decision, don't hesitate to book an appointment with our financial experts. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like. If you are new to our channel, please do subscribe. Thanks for watching.